Hello, this is Ken Tomko with T2 Asset Management doing our monthly review of what's going on in the markets. As always, please don't use these for trading purposes. They are for information, education only. I always start here with the weekly chart of the S&P 500, which goes back to 2021 here, all the way on the left side. As you can see, 2025, we started out with a steep decline. Kind of did the same thing here in 2026, but overall, the market is just going on a complete moonshot. You can see here's the new trend line for the weekly chart, and also support below us at 7,000. We had gone sideways there for about 5 6 months. It went down, tested the lows and old support or old resistance there. We were looking for it to bounce from there. Maybe not as hard or as quickly as it did, but now it's off to the races, and we're going through all-time highs once again every day. But as far as this weekly chart goes, nothing wrong with it at all to see here. We come down to a daily chart. Take a look, a little more detail. You can see again. There's the kind of 6 month sideways period that we had going through end of 25 and into the beginning of 26. Did take a nice dip and even got below the 200-day moving average there, but it had hit support that we were looking for. I'll be honest. I mean, I thought as we gapped higher here, and it had some war headline things going on there. I thought we would certainly retest that level, but nope. We went on and are just ripping higher from here. Come down here to 2 hour chart. This gives us a little more detail, like last 6 months trading here, and you see it's just an absolute moonshot. I feel silly kind of doing a trend line on it because it's really just straight up. Um, that's what we're dealing with right now. The market shows no signs of letting up, no matter what anyone thinks about the economy or war or any of this. It's surprising the price of oil. I just put gas in a car this morning at well over $5 a gallon, but it's not seeming to have any effect on anything right now. So we look at some of the internals in the market here. This line below, this is actually a little bit concerning. This is the bullish percentage of the S&P 500, which tells us percentage of S&P 500 stocks that are in an uptrend. As you see here, it's 52. It's half. Only half of the stocks in the entire market are even in an uptrend right now. So we're getting pulled much higher by some of these tech stocks. Intel, it almost more than doubled in a month. It's absolutely incredible what's happening. The next line down is advanced decline line. That's actually been flat. So while we're declining the bullish percent here, the advanced decline line on the New York Stock Exchange is going flat. And then finally at the bottom, this is the VIX, the volatility index. Normally in a ripping bull market where there's no worry and it's just going up and up and up, you would see this trade down to 11 or 12 or something like that. And it's close to 18, staying in that range. So I think some of the smart money might be saying that, this is going to be unsustainable at some point. But I've learned long ago not to really argue with the market too much. Just try to play along with it. So that's what we're looking at, a market that is just going straight up and shows no sign of abating, other than the fact that it's concerning that a smaller percentage of the S&P 500 is causing this uplift. We go here and look at interest rates. This is the interest rate on 10-year U.S. Treasury bonds. As we've shown before, last several years, we've just been sitting in a range of somewhere around 4%, between 4 and 4.8 there. Really just not showing any signs of moving anywhere. I think the stock market for a moment this week had a small concern over it moving a bit higher or looking like it was. But if we take a step back, which is what this chart's doing, we're still sitting in this range. Interest rates just aren't moving. From an economic perspective, come over here to what's going on there. GDP growth rate 2.7 is the last read that we are looking at there. That's healthy. It's nothing wrong there. Non-farm payrolls, the jobs number 115, the last read 185 before that. They're not super strong. They're not fantastic, but they're still there, and we're not seeing job losses really happening. So again, nothing to concern ourselves too much in that read. Retail sales had been 1.6% growth the reading before, and the most recent reading was 0.5%. Again, not strong, but certainly not anything to say, wow, we're looking at a recession here or anything. Finally, this always scares me, and it just scares me even more this time. The In terms of the valuation of the market, if we look here, 46.81 would be what the market would be trading at if at 20 times earnings, which is long term about what you'd see on average. And as you can see, the market does tend to return to that line at times. But it will get way away from it, and it's not a very good timing indicator, but it will come back to it. And obviously, here we're nearly double that amount. So this market is very expensive relative to earnings. Certainly, we're just seeing all these AI stocks are just going crazy. Anything to do with it, they're going to the moon, and there's no sense of valuation or any fair amount, which is sort of reminiscent of the .com. But I'll say that with a warning that it was 2 years before that people started warning about that valuation, and the market still just went up and up and up from there. So it's not a very good timing indicator. It's just know that it's there and that this could possibly happen at some point, but the market will give us quite a bit of warning that it's trading off before that. So until then, to come back here, look at the big picture. It is just up, up, and away. We're invested pretty strongly in this market and just enjoying the fruits of it, but certainly worried that we're getting a bit away from reality potentially. So I'm going to put up our contact info here. If you'd like to hear more about what we're doing for client portfolios or have any questions for future videos, love to hear from you. Otherwise, thanks for watching. I hope it was informative, and we'll see you at the next update. Thank you.